Welcome everyone, happy Thursday. I appreciate you all taking the time to join today's webinar, where we're going to be talking about how and also investing in new construction in your self-directed IRA. It is top of the hour and I do want to be respectful of everyone's time, so we'll go ahead and get started. Obviously, I'm excited to have our featured speaker today, Mr. Christopher Oyenuga. Hi, Chris. Thank you so much for being our featured speaker today.
Hey, Reneika. Thanks for having me.
Oh, you're certainly welcome. And Chris, he's with BC Capital Group. He's going to go over, exactly how and why new construction homes are, a viable investment opportunity, but also too, while also meeting the rising demand for housing, specifically here in Georgia, but also nationwide. But before I turn it over, I do want to give you just a general overview of, self-direction, what it is, how it works. And of course, when you're ready to get started with us at Advanta, the process will be pretty straightforward for you. If you have questions, just feel free to put those in the question box. We'll get those answered as we go, but also allocate some time at the end for any remaining questions. I'm Reneika Lightbourne. I'm one of the business development specialists here with Advanta since 2019, but I'm also an Advanta IRA client. So self-direction is something that I personally and actively do prior to joining staff. If you have questions or you want to kind of talk through your exact scenario, you're always welcome to give me a call or send me an email. I would also encourage you to visit our website, advantaira.com. It's a great resource, but you can also schedule a consultation with me or one of my colleagues as well. Just a little housekeeping before we get started. Just know that all of the information that's going to be presented today is just educational purposes. At Advanta, we don't give any tax, legal, or investment advice. We always encourage you to do your due diligence, consult with your professional team, whether it's your attorney, your CPA, or financial advisor, before making any investment decisions. If self-direction is a new concept for you, I just want you to just remember three key takeaways. Know that any IRA or former employer plan qualifies to be self-directed. 2, with self-direction, you're in control, so you have autonomy in terms of what is it that you invest in. Today, we're focusing on real estate, specifically new construction. And then, of course, knowing that all of the income that's generated from that investment flows back into your retirement account. If there's any related expenses, it's paid from the retirement account. Advanta will be able to help you with, dotting those I's and crossing those T's. Just a little history about Advanta and who we are. We've been in business for about 21 plus years now as the leading self-directed IRA administrator in the business. Our headquarters is located in Largo, Florida. Advanta does have an office in Atlanta, which is where I'm based, but we do work with clients nationwide. We have about $3 billion under administration. And while we don't give our clients any tax, legal, or investment advice, our team is comprised of attorneys and also certified IRA service professionals. That's a designation specific to our industry. Our focus here is providing our clients that concierge style service where they all have a direct point of contact, an assigned account manager who's going to be with them for the life of their account with us, but also to providing you educational content, such as having practitioners and experts as Christopher coming on and knowledge sharing with you in terms of some of the different things that you can invest in using your self-directed account. This webinar is recorded. It's going to be uploaded onto our YouTube channel later today, but also you can find a copy of it in our video library. I would encourage you, again, check out our, or continue to check out our website, our events page, specific to all of our upcoming webinars and also our Pitch Promote Prosper event. My colleague, Alex Perney, hosts our podcast, which is, again, more informal, but great content related to self-direction. So exactly what is a self-directed IRA? Very simply, it just means that you as the account owner, you're going to have complete control over the retirement funds, but also the investment decisions. This allows you to be able to diversify outside of the traditional stocks and bonds. We have clients, most of our clients invest in real estate related assets, again, whether that's new construction of a single family or it's a rental unit or commercial. But you can certainly use self-directed funds to invest in the likes of notes and mortgages, precious metals, oil and gas. The list goes on in terms of what you're able to invest in. It's near limitless. So why do people choose to self-direct? You can look to self-direct for many different reasons. I'll touch on just 3 of them. One, it's a new source of capital for you. So instead of tapping into your rainy day fund or taking out a bank loan, if you have an old employer plan that's just sitting idle, maybe you left a job a couple years ago, you can elect to roll those funds over to make your next investment. Or if you have an existing IRA at a brokerage firm, you can move whatever amount that you decide to make that next investment, whether it's as a passive investor into a new construction project, or more so just investing in precious metals, or whatever it is that you decide to invest in. Another reason is the stock market, the ups and downs, the volatility. With real estate, it's a tangible asset. Whether it's new construction or it's a rehab project, it's always going to retain value. People are always going to need a place to live. So if your IRA is invested in a real estate project, we know it's not typically subject to the volatility of the stock market. And then, of course, the tax benefits, having those rents, those profits, those dividends flow back into your IRA tax-free or tax-deferred. And, depending on the type of account that you have, whether it's traditional or Roth for individuals, with a Roth account, as long as you've had that for 5 years and you're 59 and a half, those distributions will be tax-free. With traditional accounts, you elect to get the tax break up front, grow your account over time. When you do reach retirement age or take a distribution, you'll pay taxes based on whatever tax bracket you're in at that particular point in time. If you are self-employed or you have a side business or you're an entrepreneur, some of the accounts that are specifically for business owners are SEP, Simples, and Solo 401ks. A lot of real estate professionals or real estate investors prefer the Solo 401k just because you have greater flexibility, you have higher contribution limits. If you do want to know more about that or kind of see if it aligns with what you're looking to do, again, definitely reach out to me and we can talk more about any of the plans, but specifically Solo 401ks if you're a real estate professional. Some of the smaller accounts that you can self-direct, but is just as important, are educational savings accounts. So if you have kids or grandkids or nieces and nephew and you want to be able to self-direct an ESA for them, you certainly can do that. And then the cost of we know medical costs is continuing to increase. If you have a high deductible insurance plan, you do have the ability or the option to look to possibly self-direct and partner your HSA with your traditional account to kind of more so aggressively grow that account outside of the stocks and bonds. And then, of course, if you have former employer plan, whether it's an old 401k or TSP type plan, those funds can also be moved over to self-direct. The only thing that you need to be mindful of, if it's a current employer plan and you're not yet 59 and a half, most times they'll tell you, no, you can't move those funds. Don't be alarmed by that. That's just industry standard. You can certainly inquire to see if your employer would allow you to or make an exception for you to do an in-service transfer or rollover of a current employer plan if you're not 59 and a half. But if it's an old job, you can certainly move it at will. There's no restrictions there. So in terms of funding your account, there's a couple ways you can fund. Again, if you have an existing IRA, let's just say you have an IRA at the Fidelity or Charles Schwab, you can move as much or as little as you need to make your investment. There's no tax liabilities for you to do that. In a transfer scenario, most cases, it'll be a trustee to trustee, meaning Advanta would actually submit the transfer request over to the other custodian on your behalf. You just have to make sure whatever amount that you decide to move, it's liquid, it's in a cash position, it's not tied up in stocks or bonds. If it's an old employer plan that you're looking to move over, whether it's a 403B or a TSP or 401k or another pension type plan, you would actually have to initiate that request. We'll be able to walk you through it, but you would have to reach out to that plan administrator, tell them you want to move X amount of dollars. You're not taking a personal distribution. They can send the funds directly to Advanta, or if they send it to you, you would just redirect it to Advanta to be deposited into your account. The other way you can fund your account is by making an annual cash contribution. As long as you've earned income, for traditional and Roth IRAs, if you're under the age of 50, you can put in $7,000. If you're over the age of 50, you have an additional $1,000 where you can put in up to $8,000. For SEP and 401ks, again, these are higher contribution accounts for employers, employer plans. For SEP IRA, you can put up to 25% of compensation, so not to exceed $69,000. Whereas with a 401k, you essentially get to contribute twice. You get to contribute as an employee, but you also get to match as the employer. If you're under the age of 50, you can put in 69,000. With a 401k or solo 401k, if you're over 50, you have the additional 7,000 plus 7,500 that you can max out into that 401k plan. For ESAs, it's 2,000 per year per child. For an HSA, again, consult with your plan provider to ensure that you do have a high deductible plan. But if you do, for individuals, you can put in 4,150. For family plans, you can put in 8,300. If you're over the age of 55 with an HSA, you have the ability to put in an additional $1,000. Whenever you're, after you've done your due diligence or you're ready to proceed with getting your account set up, you can actually just go to our website and just follow the prompts in terms of opening up an account. It'll guide you through it. But typically, you fill out the application for the IRAs electronically. You can get your account open with us relatively quick, within 24 to 48 business hours. Step 2 is funding. Obviously, again, you can fund your account using a combination of cash contributions, transfers from an existing IRA, or do a direct rollover from an old employer plan. And then finally, step 3, what is it that you're interested in investing in? Is it something that you'll hear in the call today, or do you have an interest specifically in doing checkbook control, or you want to invest in notes and mortgages? It's near universal in terms of the opportunities that you can invest in with your account. And with that, I'll go ahead and turn it over to Chris to make him the presenter. So just bear with me one moment.
Okay, excellent. Thank you, Reneika and Advanta, for having us. I'm excited to speak about real estate, some different ventures we're getting into, and specifically how to use your self-directed IRAs to invest in new construction. So we can get into it. All right, so here's a little about myself. My name is Christopher Oyenuga from Boston, Massachusetts. My background is mostly in civil engineering. I moved down to Augusta, Georgia in 2018 from DC to start working at Plant Vogel. So I am here local in Georgia. And for the past 5 years, I've been fixing, funding, renovating, and started building new construction homes in the local Augusta market. And my partner, Bryant, he's had some personal reasons today not to make it, but yep, he has his degrees in business and supply chain management. He's out of Atlanta, Georgia. He's with Maxim One Realty, I believe. He's also a realtor, and he does a lot of volume out there. He's been a realtor for about 7 years, and good friend and partner of mine in this venture for the new construction. So basically, just wanted to tell you guys how BC Capital came about quickly before we get into it. Bryant seen that we were doing a lot of volume with fix and flips and new construction in Augusta, and he was trying to find ways for us to raise capital, essentially to do more volume. And we went back and forth for about a year trying to fit a model into the fix and flip. We kind of struggled there just due to the variables with fix and flips. It's not as resilient as a new construction, which is more straightforward. So we kind of put that on pause for a year until the beginning of 2024, where we started some more new construction projects. And that's when we really fired up BC Capital to start raising capital to fund these new builds. So here's basically our personal and company evolution, like as a real estate investor. So basically, we start with fix and flipping. You can find properties different ways, fix them, renovate them, add value, and sell them for a profit. That's where we started off. In Augusta, we flipped over 35 houses, at least 15 of them being my own. And then for other clients, back in 2023, we started a construction company to help serve other investors and our growing volume. So we have a Huntington Construction Group, which is the construction arm of our company. But yeah, so the next level we looked at was buy and hold. It's always good to diversify and have some passive or semi-passive income, especially on taxes as well. So, we did have a rental portfolio of 10 plus houses over here in Augusta, and we liquidated some of that as we transitioned from our corporate job into entrepreneurship. So what we want to talk about today is the new construction. Why I'm excited about new construction is It's a lot easier to build. It's more projectable. The risk is limited due to the knowns and the unknown variables. So essentially, when we're building from a slab up, we know all of our costs per square foot. Everything has been bidded out. And from an investment standpoint, we feel safer putting our money in the new construction because just through our experience, we've seen a lot of budgets creep up, schedules creep up. And when you have investors' capital, it's important that you really stick to the budget and schedule. So this is how we're limiting our risk venturing into the new construction over here in the Augusta area. And then the next level is really commercial multifamily. So we're working on that as well. You know, some of our efforts will be raising capital for new construction multifamily as well as acquisition of existing multifamily. But again, this is just our path on it. Some people may follow different routes or, you know, jump into different ventures, but this is what's worked for us. And it's been a pretty gradual progression to help us understand different angles of the business. And again, this is a dialogue. So if anybody likes to speak up or ask any questions, please do. So again, just a little credibility about our company. This is Augusta, Georgia. We're basically on the border of South Carolina. We're 2.5 hours from Atlanta. We're 2 hours from Savannah, about 2.5 hours from Charlotte, and about 3.5 hours from Jacksonville. So it is a decent place to live and work. But this is just some of the properties that we have flipped, built, and some of our existing rentals. So again, just showing you that we are seasoned builders. You know, we have an extension of our team and network, whether it be attorneys, engineers, city officials. We're pretty tied in to help streamline some of this and make sure these projects push forward quickly.
Chris, a question came in. Can you provide any insight or talk about the, I guess, the future growth or projection of the Augusta market in general?
Absolutely. If we could wait to a few more slides, I actually cover that.
Okay.
So I can get to that here shortly.
Okay, perfect. As your time.
Yep. Excellent. Thank you. And again, just wanted to show you like why to believe me. I'm not speaking off a theory. Everything from this presentation is stuff that we've done as a company or personally. So, you know, on the top left is one of our fix and flips we did in South Augusta. Again, we started off with a $40,000 budget. So you see it went over more than $15,000. So definitely still a profitable project. And that would really be considered still a home run project. But again, there's still variables that we are trying to divert in just as we move into the new construction. You know, if you guys have been investing or if you're new to it, things to consider with these profits is gross profits. So there will be other fees, there'll be taxes, capital gains. If you're using credit cards, you know, different things that come up, but that's just a high level view of one of our fix and flips. And then on the bottom right is a property I purchased for $51,000. Again, some of the numbers here, down payment and closing was about 14, and renovation, this is a light renovation, 28,000. So then you see the picture on the right, we just spruced it up. The mortgage, we really came in very low. We were at 523. That was back in like 2018. And that house we had for a 2-year lease agreement for 1,300. So again, that's just some of your gross profits. But just wanted to show you why we can speak on the preference of new construction rather than these other strategies. And again, we should definitely be diverse. You should have different options and different places you park your money. But just for this presentation, we're just looking at how you can effectively use your self-directed in the new builds.
Okay, Chris, another question came up. I don't know if you're going to answer this, but it says average cost per square foot on your new build. Like, can you provide insight on what's the average cost per square foot on your new builds?
Most definitely. Yeah, so on the new construction that we're doing, we're at about $110 a square foot. So for instance, we have appraisals that come back saying that the property is 160 a square foot. So if you're saying, hey, Chris, I put 110 in, and then 160 comes out, there's your profit in the middle. But yeah, that is just our direct cost. That doesn't include land acquisition. That is just ground up construction costs. I think industry standard is probably around 140 to 150. Some markets could be as high as 160 and up. Our goal is to get below 100, and it's actually pretty feasible because of our relationships with our contractors. But yeah, so we're at about 110 a square foot.
Thank you. You
Yep.
referenced that the lots were not included. Do you have projects that you've worked on, or you intend to work on that? The lot cost is included into the overall cost of the new build.
Well, actually, I'd like to keep it separate because you like to have your direct costs and your indirect costs. So basically, the acquisition for our properties out here are between 15,000 to 30,000. But when I come to somebody say a build cost, they want to say, hey, if I have the land, what would it cost from ground up? So that's how I keep it separate. But you could always blend it, and I can give you a scenario of that. So this is an area that we're niching down and concentrating on in Augusta. It's called the Laney Walker area. It's a historical area. This area you see to the top left is the medical district. So fact about the medical district is there's 40,000 people who come and go to this area, whether it be work, going to the doctors, going to school. Augusta University is over there. Payne College at HBCU is over there. So the issue with this downtown area is there's no living. So what we're doing in this area is we've been able to really grapple onto some decent properties to start building it up. So I can go through here. This blue property is the one we recently completed, and here's a property on the left. That's a 1,700 square foot, 4-bedroom, 2-bathroom house. We built that one in about 4 months. So, that's our timeline. It's pretty aggressive. 4 months, we're getting that down to 90 to 100 days. So that's the target. But this is one of our new builds. So for instance, it was a 1,700 square foot under roof. And then, under roof and heated square foot was closer to 1,550. And we built that house for about $170,000.
Okay, I have a couple questions that just popped in, if it's okay, or you want to continue the slide.
Oh, absolutely. Let's answer them.
Okay, so the question is, I know you referenced that you invest in Augusta, but the question is, do you do new construction all over the Metro Atlanta?
We're branching out there. Honestly, we haven't done any projects, but my cousin's a developer out there. So, Q3, Q4, we're looking to start taking on some projects. But at the moment, we're not set up for that. But we'd love to have opportunity to take a look and, if anything, just give you an idea, some consultation and see what services we could provide.
Okay, next question or comment was, great, I'm currently working on a deal in Greensboro, Georgia, south of Augusta, own the land, but getting cost per square feet in the 200 to 300 square feet range. Let's talk. So I know Christopher will provide his contact information at the end, so definitely once you get there, feel free to grab his contact information to where you can reach out directly.
Absolutely. Yeah, we'd love to catch up. And it's really difficult, Reneika, for some of these folks to see these numbers, especially from Atlanta, bigger markets. You say, hey, you can build for 100 square foot, and that it's hard for them to truly believe it. So that's why, I can disclose anything. If people want information, I can show you spreadsheets. I'm a pretty open book to show you what our costs are and try to help you with whatever projects you got going on. That's the project we finished here. And basically you see this is a gateway to the medical district. And then here is a duplex on the right. So this gentleman is out of Atlanta. He wants us to work on a duplex. He's working on the funding. And then these same owners are from DC. And one thing to kind of take a step back is there's two players in this construction of a new build. One is the developer and one is the builder, right? So those get mixed and switched up sometimes, but really the developer is the person who acquires the land or has the business plan for the property. The builder is typically the general contractor who builds what the developer has designed. So in this case with Huntington Construction, we are integrated as a developer and we build. So these developers from DC have this property under contract and then this other property under contract. So we plan on having at least those 3 for that same client. And then these, and the red is the property that we've owned actually. So we own these 3 right here on this corner. We have this one we purchased on Wednesday, and we have this one we purchased, we're purchasing on Friday. And just for an example, these 2 are both $25,000 properties. This property over here to the left, we purchased from a friend, and this one we got off market before it hit the MLS. So also what's great about this area is we're going to start seeing all of these comps set. So all of these houses here, typically, you know, they're run down, old beat down houses, maybe 1,500 square foot or less. These are projects that are being sold and developed by the city, and they're all new construction. These 3 are finished, but what's great is that these are listed. This is 235, 235, and 245K. So we're starting to see the comps in this area come up quickly. So we're really in acquisition mode. So we're acquiring as much as we can in this area at this time because we see the wave and we're actually setting the wave, right? We're literally building down the street and we'll also be heading up this corridor. So there's 2 here that are actually working with the city in Work Done. Work Done has a fund out here where he helps contribute and they build new homes and have different community incentives. And then let's see, I think that's essentially it. Yeah, so we have these 5 builds preparing to gear up. This one we just got the CO on. And you know that what the good opportunity about this area we're niching is there's a lot of empty lots and busted down houses. We're breaking down this house, that house is broken down, tore down this house, this has to be torn down, and all 3 of these are just vacant lots. Another good thing that this area has going for it, before I move on, is this area is an old Cadillac dealership, but Augusta University is transforming that into an EV and automotive technological center. So they're going to be dumping a lot of money into here. And what's excellent about that is that gives us other exit strategies. So say if we can't sell it, we could refinance the house under a DSCR, debt service coverage ratio loan, or a lot of other products, because we'll have so much equity in these properties that we'll have multiple exit strategies. For instance, if we want to do short-term rental or long-term rental, my clients here are actually setting the comps. They're renting this house for $1,850, whereas the typical rent in the area is about $1,200. So yeah, we're excited about that. All right, so just a few headlines on why new construction. You know, since COVID, we've seen rental rates creep up to the equivalent of mortgages, and it's continued to climb. So here's just a few of the latest snippets from NPR. You know, finding an affordable place in the U.S. is pretty impossible. To begin with, there's a massive shortage of homes, somewhere between 4 to 7 million. And that was in April. You know, in June, we have Forbes, despite more resale homes entering the market, the inventory shortage remains severe and will be for some time, thanks for multiple headwinds. And again, you can read the last one from NAR, but essentially, you know, what this boils down to is there's not enough inventory. And I know that a lot of folks are kind of locked in because of their good rates, but either way, that really promotes the lack of inventory because people aren't moving. So whereas younger folks and young professionals are getting to that stage, folks are more locked in, so they don't want to lose that interest rate. So that's another reason why we see new constructions really the feasible for 2024 and moving forward. Are we good on time and any questions, Reneika?
Yeah, you're making good time. I did have a question that popped in. It says, I don't know if you're going to touch on this. I know you mentioned that it's usually less risk with new construction, but can you talk about some of the common mistakes or pitfalls when it comes, or what you look to avoid with new construction?
Absolutely. The biggest thing is control, right? So you need to have control of your costs. You need to have control of your schedule. you need to have control of your quality, right? So having the right team in place is the most important part. So when it comes to the new builds, your price can get out of control if you have, well, I guess essentially to start the basic, it starts with the scope of work, right? So knowing what you're going to build, how are you going to build it, what the finishes are. If you can look through your home and you can see it, what do you want everything to look like? So once you get your scope of work, you build out your budget. Once you get that, you have your drawings, you get with your subcontractors, and you get 2 to 3 quotes, and you just pile it all on. At the end of the project, you probably want to put a good 5 to 8% contingency. But I guess, speaking personally, land development, the actual clearing of the land, there can be a lot of overruns there. You could say, hey, you don't have enough dirt. You thought you needed more soil or less soil. The one I showed you downtown, it was a very wet site, so the water didn't drain out of the clay, and we had to build it up and bring in an additional 8 loads of dirt. So that's something that could come up. I think the big thing is just really staying in tune throughout the process and monitoring the work. But why I prefer new construction is these subcontractors I'm using, most of them are quote unquote big box companies. It's not Uncle Larry and a pickup truck. So these guys have a lot on the line with their quality. Also, they have the staff to support it, right? So for instance, I didn't have any failed inspections. And then when I did have some small issues, they were out there, sometimes 2 and 3 trucks at a time. So I think really just gearing up to have the right team on the project is more important than trying to save money with maybe a less credible or less able contractor. But yeah, I think, the time aspect of it, depending on how you're borrowing and lending on the property, your holding costs could go over. If you end up funding something with credit cards, if it's not 0 interest, some of that could kick in. And really timing in the market. That's one of the most important. If you have a house and you're selling it in December, you're going to expect less traffic than the summer months. So those are a few things just to consider.
My apologies. I guess you can go through the next slide, but another question that came in is, what do you have a set budget for new builds start to finish, or is it just more so based on that particular project? It varies.
So it varies. Essentially how I'm structured as a contractor is I do my contracts at cost plus fixed fee. So the beauty of that is we discuss an agreed GC cost up front, and beyond that, I'm completely transparent with the budget. So, if we have 3 bids, I put it on my spreadsheet and you see 3 bids, and I help you interact and be part of that process and selection. Whereas other contractors, they may be, hey, it's really 160 a square foot. Whereas we could say, hey, no, we're really building at 100 a square foot, and try to just be more transparent. So I think that's our leverage. What's good about that is we're able to build equity, literally. So by the time we get done building a house, the new person isn't building the house for 240. They're probably building it for 190, 200, because we've been able to control that cost.
Okay, a question just came in. They want you to reiterate or clarify. It says cost plus question mark. They missed it. They didn't catch it. So
yeah, so there's different contract and agreement styles for new builds. The one I do is cost plus fixed fee. So it's the cost, which is time and materials, plus the fixed fee, which is a GC cost. So there's 2 elements. So for instance, my GC cost is typically 18 to 22%. If you come to me with a property, it's already been surveyed, you have the drawings, you know exactly what you need, you'll be on the lower end because it's less effort. If you say, hey, Chris, I have this land, maybe some wetland, I need it surveyed, let's pick out a design, more of hands-on and development aspect, it'll be on the higher end of that range. But beyond that, it's just the cost of labor and materials. So I hope that explained it. But there's other styles. There's, I'm not going to talk on them because I can't speak on them great, but there's different styles you can research of new construction contracts styles. But this has been the best for our company to.
Okay,
like I said, be transparent. Let the folks be part of it.
Makes sense.
and kind of just cut down on costs essentially.
Okay. And you did answer their question. They did say yes, that was explained. So you're good there. Thank you.
Yep, most definitely. So Augusta market, here we go to the participant. So I've been in Augusta for about 5 years now, and it's just growing. There's really no stop in the near future. The big things we have out here, obviously we have the Masters tournament, which draws thousands of people. We have the medical district downtown, which actually let me just go through the list and then kind of go back through. But the affordability, you can buy houses still between 80,000 on the low end, 70,000 move-in ready. And they obviously go up to the millions, but your median house sale price is probably around 220 for a great house. Steady demand, just more people coming here due to the military base for Eisenhower, as well as the medical district, the different schools, Augusta University. Evans, Georgia is basically a suburb. I compare it to Marietta of Atlanta. Evans, Georgia was voted the #1 place to live in the US like 2 years ago from Times Magazine. So obviously they find something that's drawing people to this area. I think it's a mix of the affordability and kind of the good school systems in some of the areas. But yeah, population growth, the military presence, like I said, Fort Eisenhower. The education healthcare sector is very, very heavy. Yeah, tourism and recreation. We have the Savannah River, which dumps out to Savannah, and infrastructure development. So they're basically building up. James Brown Arena is a new construction. They're building up the Bell Auditorium. They're redoing Broad Street. They're just really dumping a lot of money into paving roads. So it's good that the leadership in the city is kind of seeing the growth, and we're getting the infrastructure and systems set up to support it. All right. So looking at different ways to fund our new builds. So today we're talking about the self-directed IRAs, but obviously there are other avenues that you could use to get into the new builds.
All right. Question that came up, if it says
Yep.
1.5 hour from Augusta, are you ready to take on that area? Like, when you ready, when you're expanding, is 1.5 hours from Augusta okay?
Absolutely. Yeah, absolutely. Like I said, we're really branching out to Atlanta, so we're meeting with folks and acquiring land and supporting some projects out there. So we're migrating that way, but we're really just sharpening our teeth and mastering the process in Augusta, just because it's so low risk. And anywhere like an hour to an hour and a half outside of Augusta, it's still pretty low risk because it's not a lot of big metro areas. But yeah, most definitely reach out and we can talk about your project.
Yeah, they mentioned they'll contact you after the call. So.
Okay, excellent. Yeah, so with BC Capital, again, we're speaking not through theory, we're speaking through application. So this is our steps to success, why we feel comfortable accepting money. People's hard-earned money, we don't take it for granted, to invest in these strategies. So we really value it and we lower all the risks that we can. So this is a process we go through, and the high yield strategy we selected is the new build sector, because we didn't want to have the risk and variables and unknowns with the fix and flip. And then obviously selection efficient deal sourcing. Both Bryant and I were both licensed Georgia and South Carolina realtors. Again, Bryant is more on the retail and volume agent side, and I'm more on the building side. But we both, we have houses listed, we sell our own. We just support investors and different folks. So, we know how to spot a deal. We can run CMAs, we can understand appraisals and rent rolls and stuff like that to help us make data-driven decisions. So then also like our rigorous financial analysis. Again, as we kind of discussed earlier, we're treating this project as it's one of ours. And especially with investors, we believe our model is going to be sustainable because it's going to continue to work and it's never going to fail. It's like a Rolex, right? It's never going to stop. So onto the capital management, we put things in place to make sure that everybody's protected, whether that be our promissory notes, investor agreements, full transparency with, you know, where the funds are going. What else? You know, we have attorneys that are recording everything with the county. So, you know, everything as far as a regular loan, there's no gray areas that we're touching. And then the land acquisition and development, again, you know, we're in the market. So we kind of have the ability to be in different conversations, different circles to acquire this land, as well as being an agent and working with other agents. So the acquisition and development, you know, that's really the meat of the process, getting the land, getting the plans, and building it and executing the project. Construction and project management, you know, that's where Huntington Construction Group comes in, and we basically manage the project from beginning to end. And then, you know, the advantage you have working with us is we are both, again, seasoned investors. So we can get creative with our commission terms, and we can also just give you true insight to have a successful sale or rental or whatever the exit strategy is of your property. And that's how we plan on essentially using the funds to make sure that it's less risk, so that you can say, hey, this was successful. We like the model. Let's just copy and paste it. And again, so how it works. So Reneika did a great job showing different avenues to get the funds into the self-directed IRA. So that's where Advanta comes in. We take the capital and we deploy it into our construction projects. Soft costs, you know, acquisition. Those are the costs early on, such as like survey, land clearing, permits, different sewer taps, and utility work. So we have an open book to show you kind of where the cash is going and how we're protected to build these properties way under value. And then again, the end result will probably be sold for profits. And then we'll disperse our cash to the investors and talk about the next one. All right, so here's a case study of a property in Augusta. There's two, I'll show you where these are on the map real quick. And again, these are actual projects on Pine Street. So these two right here. So these properties, they're two single family homes. They're 2 stories, 3 bedrooms, 2.5 baths, 1,246 square foot. And this is a custom home that we designed. So we have designers and architects to help us create the 3D models and construction plans. So the exit strategy on this is build to sell. What we did is we purchased 3 properties. They were $15,000 a piece. And so there was $45K for the 3 properties. These 2 on Pine were $30. So we're looking at about $140,000 to build. And our soft costs are about $4,200. So that brings our total project cost about $159,000. And so we have an appraised value of $245,000. So one thing that's important for all developers and builders considering too is to always have a new construction appraisal. That is your ace in the hole. That is your only backstop and foundation and support to justify why you're building and to justify why somebody would be lent on that property. There's a difference between an appraised value and a theoretical value, right? So this $245K was great for us because that showed us we're at $160 a square foot. Excuse me. So that's that property. Projected gross profits around $85K, and then lender payouts, you know, looking at about $5,000. So those again just projected profits. And any questions on a deal like this as far as construction, costs, process, what you're trying to do in your area?
Question is that typically how you structure your deal, or the question is how is the deal structured? So I'm assuming if someone's using a self-directed IRA account, they're, you know, acting more so like an LP or just a lender or a note.
Okay. Yeah. So essentially, how it's structured is there's a promissory note and then a warranty deed. I'm sorry, a security deed that's signed. So again, I don't want to speak out of terms. That's why I got my professional attorneys. But there's three or four documents that's standard to any real estate lending. It's the same stuff you'd use with a bank. And it's not really a partnership, it's more of an investment. So say if, for instance, the deal went south, you would be in first position to foreclose and take the property. But yeah, basically, promissory note, there's like 4 or 5 other documents. I can follow up with those specifics. I'd rather just not tell you the incorrect names.
Okay, understood. And obviously, if you're using your self-directed IRA account, your Advanta account manager will be able to help you complete the transaction in your IRA. Obviously, we'll help you dot the I's, cross the T's. If there's, a process of having to foreclose or take possession, the IRA would, have to cover those related expenses or costs. But we can talk more specifically about from the IRA perspective if you reach out to myself, or if you already have an account to your assigned account manager. Another question just came in, just bear with me 1 second. It says, as the builder, do you set it up to get a percentage of the profit at the end, or do we just pay for your services to build it?
Okay, so for the purposes of this presentation, we're talking about specifically using your self-directed IRA. So I'll go over that on the next slide as far as how we've structured that in the past with folks who have used their 401ks and self-directed IRAs. But as far as services as a builder, it would be cost plus fixed fee. So that fixed fee would be baked in, say it's 20%. So the house is 100,000, the builder's fee is 20,000. So throughout the project, for my services as a builder, I'm gonna get paid 20,000. That will be broken up into different milestones, industry standards. Once you get the slab poured, once you get it framed up, once you get the rough-in electrical, once you get the sheetrock, once you get the paint, once you do flooring, once you do punch lists, once you get CO. So we put those in there so that nobody is ever over leveraged, right? I'll never be so into the project like, oh, well, we've done 60% of the project, but I've only got 10% of my pay. Or you'll never be at a point where like, hey, you've only done 30% of the project, but why are you charging me additional fees that are outside of the time and material? So I hope that answered your question, but basically it'll be the fee broken down into different milestones on that cost plus structure. But when we're talking about using your 401k and self-directed IRAs, what we're providing is double-digit returns. Essentially, it's 1% per month. So over 1 year, 1 fiscal year will be 12%. And again, it's just backed by the real estate, whatever land we acquire, plus the improvements which are being made by the week. So essentially, for instance, there's been a deal on one of my properties. They gave me 65K. That helped me purchase the property and do some of the soft costs. So they get 650 a month, and that'll be paid out at the disposition of the property. So we have 3 different cases here. 25K, they get 250 a month. 50K, they'll get 500, and 100,000. 1% of that is 1K a month. So we do have a holding period of 12 months, but as we get through these projects, they're going to get finished quicker than we expect. Again, we have a 90-day target we're going for, so that could mean between 4 months to 5 months, the property could be already built and sold. So that's why we'll be in communication with you. Say, hey, this is the status of the property. We maybe have another opportunity coming up, or do you want to roll it back in and exit? We're definitely super flexible with that, but we do want to let you know that it doesn't take 12 months to build a house. So there may be a hybrid or a mix of how we acquire and disperse the funds to support all of our goals, essentially.
Okay, a couple questions came in. Great. It says, are you only building on slab, or will you also build walkout basements?
Yeah, we could build walkout basements as well. Just a little history about my actual hands-on experience. I've been in construction for 20 years, and for about 8 years of that, I was a concrete carpenter. So I used to do concrete foundations, walls, tilt up, finishing, all that stuff. So, you know, that's what really got me into civil engineering. Beyond the concrete side, I've done asphalt, framing. I've been a variety of different other, you know, masonry, demolition, a lot of other parts of it, but really decided to just get into school and out of the ditch. But I do have a good background in actual hands-on. But yeah, we can help you build that.
Okay, great. Thank you for answering that. And I think you alluded to it in terms of staying in constant contact with your investors, because one of the questions is how frequently, how often will you communicate or provide updates to investors?
Something reasonably would probably be bi-weekly. I think bi-weekly would make sense. But we're flexible. That's the thing about us. We're grassroots. We're flexible. We're just trying to make it make sense for everybody. You know, daily and weekly updates, you know, that's another job. But like bi-weekly status updates, we'll have a schedule, we have our budgets, you know, we can send you reports. That's not a problem. That's just information.
Okay, and one comment, person referenced they're excited. So again, you know, they'll definitely be reaching out to you. And I know you're gonna reference your contact information if somebody wants to give you a call or send you an email.
Absolutely. Yeah, so before I wrap up, you know, I just want to show you guys with real estate, it doesn't always have to be a linear growth. It can be exponential. And that's why we're picking this new construction. Because if we're talking about fix and flips, you got to find an old dusty house and get to it. But this model is going to be transferred to larger developments. So larger tracts of land we're looking at to build townhouses and subdivisions. So again, we're really just sharpening our teeth with this. But I wanted to let you know, like, this was one of the first houses we purchased, we built, and now we have like another 8 going on here. And on the Huntington construction side, I have like 2 or 3 other clients we're gearing up to build. So I just want to have you guys like be hopeful and know that, you know, it doesn't have to be like first grade, second grade, third grade. You can skip right to high school in some instances and kind of cut that learning curve and make more money. Essentially, it's what we're looking to do. So that's what I have for the slide. I'll be happy to provide that slide to anybody if they'd like it as well.
Yes, you can certainly. Again, this is recorded. It'll be on our YouTube channel. Here's Christopher's contact information. Definitely feel free to give him a call directly or send an email so you can kind of communicate directly with him. I'll get an updated copy. I do have a copy of the slides, but I'll definitely make sure I get the updated version. And if you have questions or you want a copy, just feel free to reach out to me. You'll get an automated copy of the recording, you know, in a day or two. But you know, feel free to reach out to him specifically to any new construction that you're interested in or any projects that he referenced that you would be interested in investing in. If you want to you know, talk more about self-direction or you have questions or need clarity on anything, definitely feel free to give me a call or send me an email, and I'd be happy to walk through that process with you. If you have any last minute questions, go ahead and put those in the question box. Chris, I don't know if you have any parting words, but we're right, pretty much right at the hour, so we can go ahead and end today's webinar. But great information, great presentation, great questions. I appreciate everyone taking the time to join us today.
Absolutely. I'll just end with, you know, we're investing with a passion and a purpose. And I think that's what makes it better than, hey, throwing your money to different avenues. So we're just excited about it and looking to help you guys diversify and find other options to and avenues to use your self-directed IRAs. So yeah, appreciate you for having me, Reneika, and I'll definitely pass it on to Bryant.
Well, you certainly welcome. I appreciate you being our speaker today. And again, feel free to reach out to Advanta, visit our website if you have any questions related to self-direction, give me a call, and happy investing, everyone.